All right, happy belated Thanksgiving holiday season, everyone. This is week 48, Outlook 102. I did not do the second Outlook of week 47. No excuse for that. Even if it's a holiday, I should have done it, but I was just being lazy. So, moving on from there, little housekeeping. Once again, I said that I'm transitioning to futures in the new year completely. CFDs, I will no longer be looking at those. I also decided for CFDs as of right now, I'm looking at strictly XXX USD pairs, explain my reasoning behind that in previous videos. I refined my watch list to this accordingly, and yeah, so let's get into it. Euro USD, what we're looking at, market state, we're still in a bullish run, judging from the highs and lows generated from here. We saw the actions that occurred. The notable actions were the liquidity draw here and the break of structure of the current price leg. And then we led to the break of this low down here, which solidified the pullback essentially. Well, I'm sorry. Let me be extremely clear what I'm talking about. Well, actually, let me clarify something real quick. So when I say a price leg, because some people have definitions and I have different definitions of a price leg. When I say a price leg, it usually, this is probably going to be a longer video. It usually stands from a structural point a to a liquidity point. All right, and so what does that look like? For a bullish price leg, that means that the lowest low of that proposed price leg is going to be my structural point. So because we're in a bullish run, and then the highest high is going to be a liquidity point. Well, how do we determine what's a structural point and what's a liquidity point inside of a price leg? Well, the motion or the action, not the action, the motions and price action that goes from here up until we get to that liquidity point, this phase is called the impulse. All right. And then once we clear the most recent low inside of that impulse before creating the high, which is also, a part of creating that high, once we break structure, once the action occurs here, it's called a break of structure. Once that happens, that right there, then that gives us the next phase of the price leg, which is called the pullback. And so the anatomy of the price leg is structural point, liquidity point, impulse, and pullback. And the pullback is where we want to look for all of our entries. I rarely look for entries inside of an impulse phase. I primarily look for entries inside of a pullback phase. Now, when you blend that into the market structure from looking at the market states of ranges and runs, you can play around with things, but primarily what you're always going to want to look for, especially if you're following the system I use and RCV, you're going to look for entries in the pullback phase. And that goes for whatever structural level that you're looking at, whether you're looking at the macro, micro, nano, whatever, all those levels. You're going to try to look for entries on the pullback. That's just how our entry models work. They're looking for inefficiencies that are generated inside of the impulse phase of the market, and we want to take advantage of those, knowing that once price generates that liquidity point, in order for price to continue the trend higher, it has to go back or come back during the pullback and refuel to mitigate whatever inefficiency exists. And then that's when you get those actions there. This is the key. All right, so that's the price leg. And the main point why I'm bringing this up is because I want to emphasize the break of structure aspect of this price leg. So when we have this liquidity point, or really this action of a break of structure here, why this is important is because this defines the transition of the price leg. And there's two breaks of structure. One is the solidification of the price leg, and then the other one is the break of the other price leg. And so this one is really an internal break of structure, and this one is an external break of structure. But I call them both breaks of structure, but it's, internally, this is what's going on in my mind when I'm saying it. So internal break of structure solidifies the price leg. That's what we're looking for. The external break of structure is more important for transitioning of market states from range to run to range, and that's when we get those things, right? And then the other action that we have is a liquidity draw. I'm not going to explain that one, but yeah, so that's the breaker structure there. So when we start looking at these charts here, this is want to keep this in mind in my explanations for why I say things or look at structure the way I do. All right, let's get back to trading view. All right, so on Euro USD, like I said, we are currently in a bullish run. As you can see, if we move to the line chart, um, here you can see just looking at the highs and lows, if you want to denoise the chart looking at candles, you can see that we have high, low, high, low, high, liquidity draw, breaker structure, which is creating that high there as well. And so now we are currently inside of a price leg, this current price leg here. And so the reason why I say it's the current price leg is because, just based off the definition I gave you, this is the last low that created this high here. This is what caused the break of structure. But not only that, this low here was mitigated here, like so. So once that low was broken, post impulse phase, this is what solidified the pullback. So once this little low here internally of the impulse, this was broken, this solidified the pullback, and now that's when I look for entries for buying opportunities inside of this price leg. And so that led me to showing you guys that, hey, this is what I'm looking for. That we have mitigation, or the inefficiency was spotted here on the discount side of this price leg. It was a price gap. We mitigated 50%, and then we mitigated 50% again of the response. And now we are pushing higher, looking for price to continue the bullish run, because that is the overall, or that is the macro bias currently. And if price decides to forego that, then we would be looking for a transition action, which would be a breaker structure as well, but an external breaker structure. So this would be a breaker structure here, right? And we would be looking for potentially a external breaker structure here to transition us from no longer a bullish run, but into a bullish range state, which would exist from wherever the low of this range is into the high here. And I'm not going to do that analysis to identify the range, because right now I'm still looking for continuation of bullish run. So, but that's just the counter analysis, not going to spend too much time doing that. But the bullish run here, we've got the reaction, we're getting an impulse, we're picking up steam. It seems we had some sort of sensitivity to whatever was inside of this high here, inside of the pullback. So we're looking for continuation to press on higher towards this high here overall from the macro perspective. I'm not too sensitive to the price action that's happening, the really consolidation or jaggedness that's happening right now. What I'm sticking to is, hey, if I'm looking at it from very overall perspective, think of it like this: impulse, all right, pullback, all right, and then the next one uh, should be impulse. That's what we're looking at. That's what we're looking at. Now, the candles, this is what we use to dictate how we enter and where we want to enter, blah, blah, blah. But the overall direction, this is how you should be looking at it: impulse, pullback, or impulse, pullback, failure or unwillingness, and then transition, right? Simple as that. I've given you guys too much there, but simple as that. So that's Euro USD, looking for continuation of bullish trend. All right, on GU, a little different. We transitioned out of the bullish range notated by the Fibonacci, from this low here to this high here. This range was created post bullish run, and we got that transition from bullish run once we broke this external structural point here that solidified the range, and then we had a lot of consolidation inside of it. Ultimately, price failed to break out of the bullish range to the upside. Then that led us to transition into a bearish run. So we transitioned after we had a break of structure at this low of the range, which was our ultimate. I'm sorry. This was our ultimate low here. That was the break of structure that occurred here. And once that break of structure occurred, that transitioned us into a bearish run. So not just because this price action was moving lower, but the action that occurred at this external structural point of the bullish range. That is what caused the transition of the bullish run into, or I'm sorry, bullish range into a bearish run. So we are currently in a bearish run, but this is why I wanted to point that out. The bearish leg inside of this bearish run has not been solidified yet. We are still generating internal highs and lows as we descend, lower. We have yet to solidify this pull. We've yet to create the pullback portion of this bearish leg. We've generated our structural point for certain. We have the structural point because this is what caused this is the high that caused the break of structure here. But we have yet to solidify our liquidity point because we have not solidified our pullback. So some people would see this as the high. This is where it's up to debate. You see this low, high unwillingness here as a pullback, and that solidifies it. But to me, I don't see that as a pullback because what I like to see is highs that break lows and lows that break highs. So in this particular case, the last high to break a previous low inside of this bearish run, inside of the impulse portion of this run, is this high here. So because of that, I don't consider this leg to be solidified yet. If you're looking at it from a different perspective, if you're looking at it from the micro or the meso perspective, you can see that. I mean, yeah, I can argue. You can argue that yes, this is a high, or whatever. But I'm not looking at it from the macro perspective, from the daily time frame, which is where I start my analysis. This is the high I want to see broken to solidify the price leg in its entirety and begin the pullback phase. So, yes, I was looking at a counter trend play from here, but this was in anticipation, lining up with seeing price looking to solidify this price leg. I think this price action of this bearish run currently is over exhausted. It's exhausted right now, pushing lower. We've pushed deeper into essentially this bullish run, or this bullish run here. And so now what I would like to see is the mitigate, or what I wanted to see was mitigation here and immediately push up. But I was just early in my entries, and now we're getting that sort of pull backy price action, but this isn't solidified yet. But this is what I would want to see is price, whatever, whenever it does, there could be some sort of, trending motion here, but pullback, price leg there, and then, continuation. And so this here is when I want to start looking for entries. And ideally, I've pointed it out, like I've been tracking it for a very long time now, for months now. This is the price gap that I'm looking for entries that I want to see, and then hold long-term swing trade it to continue lower, ultimately looking for price to mitigate this structural point here, which is now rendered into a liquidity point because we transitioned from a bullish range to bearish run. So previous liquidity point or previous structural points, once we transition states of the market, are turned into liquidity points. Structural points become liquidity points once we transition states of the market. All right, so that's what I'm looking at on GU. Once again, shared a little too much. Happy holidays. NASDAQ, what happened here? We have not generated a bullish range yet. Why? Because what happened at this structural point was not a break of structure, but it was a liquidity draw. So as of right now, we are looking for continuation of the bullish run to take out this liquidity point here, which happens to be the all-time high. That is what we are looking for. If this action here had been a break of structure, then we would have solidified the bullish range existing from this low that caused the break of this high here, and then that would exist from this low to the liquidity point here of this high, and then we would be in a bullish range. But because the action that occurred here was a liquidity draw, essentially no AI bubble, the burst hasn't happened yet, or whatever. All we did was draw liquidity from this low here. Funny how that works. And now we're looking for price to continue higher. See how the rebound was extremely fast, how this seeming, very voluminous price action was very fast going down here, but all it was just a move to draw liquidity from the structural point, right? So looking for continuation towards the high here. So what I'm really looking for right now, if I'm doing analysis, is firstly, I do see from the counter analysis, you have this price gap existing there. But if I'm looking based off the liquidity draw, I want to see a pullback into this price gap existing here, right? I want to see that mitigated, and then I'll look for my entry inside of there, and I want to see essentially this, and then I want to see that in order to take out that all-time high. That's what I'm looking for right now. Whereas the counter analysis is, mitigation of this price gap here, or potentially mitigation of this price gap, here, whatever, and then we start, moving lower to take out that low. And if this low happens, because now we've transitioned essentially our structural, whoa, like this. All right, here we go. Now that we've transitioned our structural point from this low to here, I no longer need this. We are now looking for, if this price were to turn over, the counter analysis is, hey, what is the action that occurs here? If it's a break of structure, well, we've transitioned states from a bullish run to a bullish range. If it has another liquidity draw, then we just shifted the structural point down lower and we're pushing higher. And so that is one of the deceptive points. I'm not going to explain it, but liquidity draws are very deceptive in people thinking that we transition states, but really it's just a reset of the market and shifting that structural point or shifting the price leg start point lower. That's all it is. That's very different from a break of structure. All right, but I'm not going to explain the liquidity draw. So that's NASDAQ. That's what I'm looking for. All right. So moving on, XAU gold. All right, XAU USD. Excuse me. So once again, we're still looking. We're in a bullish run. Explain the mitigation of this price gap, the reason why I chose this price gap for price to continue higher rather than this being mitigated and price continuing lower to break structure here. This was essentially just a pullback to mitigate this low here, or sorry, this price gap here, this inefficiency. And then once we got that response from that generated this price gap, price mitigated that there. And now we've taken out this internal high and we're having a response here in the form of potentially a liquidity draw, which if this is a liquidity draw internally, then we'll pull back to mitigate, whatever is inside of this internal run. And when I say internal, I'm talking about inside of this overall price leg from this low here to this high here. All right, that's the high and low. Because we have this low, high, this is what had the break of structure. Not only was it a break of structure that solidified the pullback, but on top of that, we mitigated the price gap, which just so happened to be at the low or the low of this price leg, and so price mitigated that. And so now we are in the second impulse phase, essentially, of this price leg, but right now we are inside of this price leg. So we're kind of consolidating because we haven't just fully expanded, but right now we are still in the second impulse. And so I didn't explain that, deeply in the other one, but because I wasn't explaining post mitigation or post balance of the price leg. But this is essentially what's happening is once you have a price leg, which in itself is just like a mini range, you have a low, a high, a pullback, and once that pullback occurs, you mitigate whatever is inefficient, ideally the lowest inefficiency, and the price leg's balanced, and then anything after that is just new inefficiency that exists inside the price leg to give more opportunity to fulfill the move that the market is looking to give. But as of right now, if this internal high is mitigated in the form of a break of structure or a liquidity draw, it looks like right now, we'll see if this is a liquidity draw, then this will pull back to mitigate whatever inefficiency that was generated inside of this run to take out that high, that internal high. But ultimately, from the macro perspective, we are looking for mitigation that we had here, and we're looking for price to take out the all-time high or really just the liquidity point generated, which equals the all-time high of this price leg from this low, this structural point to this liquidity point. All right, so that's what I'm looking for on gold. The other opportunity is, transition, but this seems very unlikely that we transition based on the liquidity that's being built up and the bullish pressure that's being built up to take this to the all-time high. But always open to it, right? So if this were to transition, then obviously we would be looking for the break of not only this, because this is not a structural point until we break this high, but this low, but we would be looking for the break of the structural point, which exists here. And so if we were to come here, which is very deceptive, if we were to break structure here, essentially, this would still just be considered an internal break of structure. It would not be an external break of structure. It would be internal because the price leg exists from this structural point to that liquidity point. So we would be looking for a price to mitigate this structural point, and that would give us the transition, potential transition. We would have to assess the action that occurs here to see if it's a liquidity draw break of structure in order for us to show that we've transitioned from a bullish run into a bullish range on gold. All right, which is just very far away and highly unlikely based off of the current price action, is what I'm saying. All right, pretty long video, jam packed with information. Please, please, please ask questions if you have any in the RCV or my chat. And yeah, peace.